The major indices all hitting new record highs this week with, yes, the Dow touching 40,000 for the first time. Here are some of the names that got us there. But which ones will continue to go higher and where should you cash out? We're trading the market leaders in a special edition of Three Buys and a Bail. Our trader today is Victoria Green, G Squared Private Wealth founding partner and CIO and a CNBC contributor. It's great to see you again, Victoria. Welcome.
Well, thanks so much.
Let's start with NVIDIA. Yes, it's up 89% this year. It's the top performer on the NASDAQ 100, third best on the S&P. Reports next week. Is the rally over or not?
I don't think the rally's over. Now, it is important to have good results next week. A lot of it's going to be about the outlook and guidance forward, as it is for most tech stocks. But I think as long as it's solid, as long as their growth trajectory remains intact, they're going to get over the 950 hurdle and they're going to get over 1,000 a share. So for me, this is still a buy. They're by far and away the leader in the clubhouse in the chip industry, and I don't see that going away. I feel like they're almost about to run roll everybody else because they're so far ahead with the chips they're manufacturing. I mean, look at the Oracle XAI deal. That's almost all going to be funded through NVIDIA chips. And for me, that's so much growth potential. The stock is not overvalued, and the growth trajectory doesn't look like it's slowing down. To me, it looks like it's going to accelerate for them. So it's still a buy, and I see $1,000 easy for them if they beat next week.
Real quickly, what do you make of some of the big name investors who have been trimming their positions? They've done quite well in it. Stan Druckenmiller, Brad Gerstner, obviously. And the fact that, look, a 38 forward PE is hardly, too frothy. Well, OK, we could say it's frothy. It's not crazy. It's not 100. It's not like Netflix and Tesla used to have. But is that PE still too expensive?
Yeah, and is 38 cheap? No, but is 38 reasonable for a transformative company? Yes, and I think this is still such early innings in the AI trade, and we're going to see so much investment, not just from companies, but also from sovereign nations, from individuals. As we all get into this AI play, we're still early innings on that. This development is going to continue, and the chip demand is only going to continue to grow. And for us, the challengers just aren't there yet. We can talk about China and AMD and other people that are trying to ramp up, but NVIDIA, by far and away, has made the best chips, continues to make advanced chips, continue to make better chips than their competitors. It's like, do you want to buy a Mercedes Benz, or do you want to buy like a Toyota Camry? You'd rather ride around in a G-Wagon, right? And I feel like NVIDIA is the G-Wagon of the street.
All right. Let's move along to Amazon. That's next on our list here. It's up 21% year to date, third best stock on the Dow. Its ongoing cost-cutting efforts and growing ad revenue with AWS, a major driver for the stock as well. You are sticking with Amazon.
Absolutely. For me, I see 200 easy on the stock, and I see this also as a generational hold. I do not see this as a tradable stock. I think this is one you want to put in a Roth and you hold it, because for me, they continue to develop new growth lines. Look at AWS. A decade ago, that was nothing. They were just an online retailer. Then AWS is now about 17% of revenue. Now ads are growing, and these are both very high margin businesses. We feel like AWS could get to 40% margin within the next couple of years. And I feel, and it might be a bit of an aggressive call, but I feel like by 2025, they're going to be a $200 billion a quarter revenue company. And they have other things they can lean into. Look at this. There's word that they may be starting to kind of use their logistics for outside their sales revenue. So maybe they start competing with FedEx and UPS. They already ship 80% of their volume. They're extremely good at shipping product. What if they expand into even more revenue streams than they have now? And that just further enhances their growth. So for me, Amazon's one of these companies I absolutely love. Do not love the ad on Prime, though. Like, I'd like some way to override that a little bit easier, please.
I'll just wonder if they're under more scrutiny at some point for divestitures, so you can't have AWS subsidizing retail, and especially once they become the biggest company in America. Anyway, let's move on to Goldman Sachs. Speaking of crowd favorites, that was the chart we teased. It's actually up 21% this year. It's actually neck and neck with Amazon for that number 3 Dow spot. Pulled back from that retail banking push. They're focusing more on the core businesses. And this one makes it on your list.
Yes, absolutely. I see this, again, as the potential to move to 500 a share, because Goldman went back to being Goldman. And Goldman is very, very good at being Goldman. Their trading departments, their investment banking, their ultra high net worth focus, and they're continuing to grow other lines outside the retail. Their actual custodial business growing into the RIA, their asset management business continues to grow. But for me, it's just their trading and their deal making is so core to their revenue. And they're very, very good at that. And we see the IPO market heating up. We see M&A M&A heating up. Even with high rates, we are seeing more and more deals getting done. And Goldman, to me, is one of the leaders in that field. And they also then continue to look beyond that. So let's get into the alternatives push that most asset managers are getting into. That's a new revenue stream that Goldman hasn't had a huge chunk of that they can continue to push more into. Yeah. I see this as early innings in Goldman rally, and I'd buy any dip, and I could see this stock at 500 maybe by the end of the year.
Wow. All right, let's go from your 3 buys to your bail for the group. And it's a name that has rivaled NVIDIA with gains this year, but is way less well known. Constellation Energy, up 84% just since January. It's number 2 and number 4 on the NASDAQ 100 and the S&P, respectively. They're focusing increasingly on their role as a data center power supplier. How can you be so excited about NVIDIA and bailing on this one?
It's not that I'm bearish. It's just it's a little expensive and it's looking a little toppy for me. I'm a little worried they're kind of going to retest that 185 level. It's just looking a little weak. I do not hate the power trade. I love it. We've been leaning into it. We think power, data infrastructure, data is a good play. This looks a little bit expensive here to me. And that's the only reason that I'm saying, hey, maybe would be a good time to take profits. First off, it's a utility. Can we remind ourselves they're a nuclear utility? So we just need to kind of step off of this, that yes, they are growing. I also will mention there's a little bit of a growing tail risk that if there is a red wave, the IRA, which is the Inflation Reduction Act, right, which has done a lot for their profit margin, could be at risk. Now, there was a lot of talk about, oh, we're going to repeal Obamacare if 2016 happens, and then they didn't. And right, so I see that, though, potential risk.
That is fascinating. Victoria, thanks for drawing our attention to it. For all your thoughts today, we appreciate your time. Victoria Green, G Squared Private Wealth. Power Lunch is after the break.